Hello and welcome to the first episode of DealPen's Capital Markets Analysis Series, where we'll take the time and effort to provide current trends, market insights, and some other points of interest on ubiquitous topics within the world of finance. This is a very interesting opportunity to provide a video blog to the world and having them take a glimpse into really the world of investment banking. As I've been doing some research on who is out there providing capital markets insights. In the world of finance, it's typically either professionally produced series, or a lot of times it's people who are providing market insights, or especially in the world of personal finance, advice from their own personal experiences. Very rarely do you see anybody that has, or especially is currently an investment banker or an analyst, because in the world of investment banking, you have regulations under FINRA and other organizations like the SEC, which prohibit, and many times the firms that these people work for prohibit any types of communications outside of their purview. And so for the broader public, they're often fed data points through professionally produced series, or otherwise through word of mouth. And so what we hope to do is start to change that a little bit, to give you firsthand insights and knowledge and what we're personally seeing in the marketplace, and to start to open a dialogue and put a face to DealPen. So this first series, we will start with our current experience in a number of meetings that we held in Omaha, Nebraska over the last couple of days, specifically talking about capital formation and executing growth strategies. We have a number of data points, but one that is of particular interest that we walked away with was it would appear that the appetite for risk is re-entering the market. And this data point is becoming apparent because of, well, number one, the IPO of General Motors went off the other day. Who would have ever thought? I haven't been paying that close of attention, but there's no way I would have thought that General Motors would have been to a point where it was even ready to go public, let alone it went public and it was originally oversubscribed. I'm not sure what the book looked like when it went public. I think they upped the size of the deal, but it went off, and that's what's really important these days. That risk appetite is re-entering the market, and investors are willing to take that risk. Another interesting data point that we learned while we were in meetings in Omaha, Nebraska, is that there are certain high yield issues that are starting to remove restrictive covenants. This is really good from a cap structure point of view, and people's abilities to get deals done that are a little less restrictive. And it's also, once again, really demonstrating that data point that risk appetite is increasing in the marketplace. In terms of capital formation, it's still extremely difficult if it's anything that is passive investors. Deals that are getting done with private companies early stage are typically affinity investors, strategic relationships. We're not seeing anything where it's pure financial investors that are putting $1 in, hoping they'll get $2 or $10 back out of a deal in 5 to 10 years. I personally don't see that coming back anytime soon, because you still see fabulous bargains being able to purchase securities that are publicly held in the marketplace. And still today, you just can't put enough of a premium on liquidity and the ability to trade in and out of securities. I think that's going to wrap it up for our first ever episode of DealPen's Capital Market Series. You're welcome to correspond with us anytime. My email is pd@dealpen.net. You can go to dealpen.com or dealpen.net to see our contact information. You won't see much of a web page at this point in time, but as always, that is on its way. We want to make sure we have the right platform as we start to communicate with the broader public, and we thought we could accelerate that with our first video series. So thank you for taking a few minutes. I also want to give a shout out to a book that actually an audio book I listened to, one of the first audio books I listened to on the drive to and from Omaha, called Crush It by Gary Vaynerchuk. And I highly recommend this book, especially for if you're watching this video blog, you're starting to understand the impact of social media. No question about it. Gary and his book really inspired this. I would recommend the audiobook because Gary took the time and effort to provide additional insights that's almost hard to articulate on print. And especially he had the flexibility to give some current market insights and give a shout out to things like LinkedIn, which if anybody's watching this that knows me in particular, LinkedIn has been a pretty important CRM tool for me, and I see that continue to become very robust. So once again, shout out to Gary and to the book. Was very inspired by it, and you always need a lot of inspiration when you're out there trying to do things on your own. So I appreciate it. Appreciate you taking the time. Look forward to corresponding in person, and we'll catch you later for the next one. Thank you.